Hi, John. Thank you very much for joining us today.
Great to be back.
John, there's been a lot of new developments at Sprott since the last time we spoke, including your AUM going over 20 billion, further growth in the Sprott Physical Uranium Trust, and also your recent acquisition of the Northshore Global Uranium Mining Index ETF. And I want to talk about all those things. But before we do that, just for the benefit of those who might not be familiar with the Sprott name, can you just give us a bit of background on Sprott and tell us about your various divisions and your mandates in those divisions?
Yeah, sure. So Sprott's been around since 1981, so it's a long-standing Toronto-based company. But the firm has evolved greatly over the years, and most of our clients are actually in the United States right now. We manage money for everybody from institutions right down to individual investors. And our focus is really on metals and mining and real assets. So we run a number of physical commodity funds that hold physical gold, silver, platinum, palladium. More recently, the Uranium Trust, which owns physical uranium. And then we have a business that manages public equities. Those are mostly in gold and silver mining. And then we also have a division that invests in private investments. And those are very interesting in the mining sector, related to private debt, streaming and royalty deals. And then finally, we have a broker-dealer in both Canada and in the US that focuses on both the institutional market and the retail market. And I'd say 2021 has been a real watershed year for us in terms of all the divisions really performing well. As you mentioned, we recently broke through the 20 billion US AUM level, which is the highest the company has ever reached. And I think that's just a reflection that a lot of the different investment themes that we focus on have worked out really well, and there's growing interest in them globally.
That's a great overview. So let's move on to the Sprott Physical Uranium Trust product, or what is quite often referred to as SPUT. In July, when you took over the UPS product, the NAV was around 600 million. At the end of October, it was 1.6 billion, and now we're into November. Has that number increased since the end of October?
Yeah, it has. We are very close to 2 billion. So I'm hoping we're gonna break through that number any day now. But we're just shy of $2 billion. So I think we spoke about 4 weeks ago, and I just did a quick tally and concluded that since we spoke, we've added another 6.6 million pounds of physical uranium over that time. So the interest that we're seeing globally continues. When we acquired UPC back in July, we had 18.1 million pounds of U3O8, and we're very close to 40 million pounds. We're about 700,000 pounds short as of recording today. So we're almost at a very big milestone of 4.0. So it's been incredible. I'd say the very interesting thing that's happened in the last 2 months with the trust is that the interest we're seeing in it has really evolved to more generalist investors and more global investors. Many large institutions around the world that have different fund mandates, whether they're equity mandates or macro funds or clean tech funds for that matter, are now looking at uranium as a potential investment. They like the theme of decarbonization. They view it as an ESG centric investment. They look at it as still a value type of play, even though the price of uranium's gone up about 50% in the last 3 months. It's still way, way below where it was pre-Fukushima, and obviously in the last cycle back in 07, where it hit almost $140 a pound.
And the size of the product or the growth in the product really must help that too, bringing in these new investors. As we mentioned earlier, when you first purchased UPS, it was only 600 million in AUM or in NAV, so it was relatively small. But now, given the growth in size, it must make it a lot more beneficial for institutions to buy this product.
Yeah, and that's a really good point. I mean, when we acquired the predecessor vehicle, I made it very clear to everybody I thought it was way too small because it didn't have the size and scale to really entice institutions to get interested in physical uranium. So, at 630 million, if you're an institution and wants to come in and purchase $50 million of the fund, you sit there and you say, am I comfortable being that percentage of the fund? Do I have any restrictions on that? Now, fast forward to today, the fund is almost $2 billion US. You're having very different conversations in terms of the dollar amounts that the fund can take in on any given day. And we've had institutions in the last 4 to 6 weeks come in with, you know, $30 to $50 million single trades that we've done with them, and you know that we can accommodate very easily now as the fund is scaled up. So it is a very important point to get bigger institutions and more institutions involved.
And John, the ATM in its current form, I believe the maximum or the cap was 1.3 billion. You must be coming close to that.
Yes, we are. I think the current number we have remaining is somewhere around 275 million. And it's been pretty astonishing because when we filed the second shelf prospectus back in September and added $1 billion to the number, we obviously caught the market's attention with a pretty big number, and it's amazing that we've almost drawn down most of it in the last 2 months. So that's something we will review and you know, add to as if we see more demand.
And the mechanics behind doing that or increasing that number, it's relatively easy, is it not?
Yeah, I mean, it is a process you go through with the regulator. We've done it for other trusts multiple times, so it's something we'll strongly consider for sure.
And what's the maximum allowable cash position of the trust, and how soon after you raise cash, how soon do you have to buy uranium?
Yeah, so the trust documents basically say that the fund should try to be at least 90% invested at all times. We have a little bit of flexibility around that. We've been running at about 97 to 98% invested at all times. So we've run that well below the threshold of 90. We have been holding a little bit more cash of late. We want to have a little bit more dry powder to take advantage of any market dislocations that we've seen. And we did see one back a few weeks ago where we saw a little bit of a lull in the market. There was a little bit of overhang of supply, and you know, we wanted to take advantage of those lower prices. So we're holding a little bit more cash, but as I said, it's still, you know, in the kind of 3% of AUM, and that's worked out pretty well of late.
And what's the latest news with regard to your U.S. listing?
Yeah, so we started that process with the New York Stock Exchange. They're starting to draft the application documents, and they've just sent us a first draft to review. So that's one of my tasks this week with my team, is to review that, and that we hope to have that application submitted before the end of this year.
That would be a nice way to finish up the year.
Well, that was the promise we made to the UPC shareholders, that we would get the application in within 6 months of the transaction, and also Sprott is also paying for the legal costs related to that. So that was the last phase of our enhancement program, as we describe it internally, to reorganize UPC.
So that's a great overview of SPUT. Let's move on to Northshore now. You recently announced the acquisition of the licensing rights to Northshore Global. Do you just want to provide an overview of that? And I guess also tell us what was the impetus behind doing so?
Sure. So, you know, in the last few months, as we've been marketing the Physical Uranium Trust to investors around the world, it became very apparent to us that many investors, whether they're retail or institutional, are co-investing in both the equities and the physical. And every investor is a little different in terms of risk tolerance and valuation sensitivity and so on. But a lot of investors are holding the equities, uranium equities, and the physical in some combination. So it really dawned on us to say, well, look, we're having this great impact with SPUT in the uranium, on the physical uranium side. Why wouldn't we have a uranium equity side, just like we do in our other segments? So, for example, we have a physical gold trust, and we also have a gold miners fund. So it's the same principle of having both solutions available to investors around the world. And the Northshore fund is about 2 years old. It obviously started at a very low point in the uranium cycle. It really kind of meandered around $20 or $30 million of assets for the first year or so, and then it took off. And right now the fund is $1 billion. So it's a very significant size fund. We think it's the best pure play uranium mining ETF in the world. Tim Rotolo, who's the kind of key architect and sponsor of the fund, he acknowledged that, you know, putting his uranium ETF and SPUT together would be the perfect combination for the marketplace. And we finally reached an agreement to do that. So over the coming months, we'll be getting all the necessary approvals, and then hopefully the new Sprott uranium miners ETF will be born sometime in Q1 of next year.
And do you plan on making any changes to the ETF, or is it just going to continue on in its present form?
No, our playbook on these acquisitions is really simple. It's about continuity and making improvements where we can. So we really like the underlying index and what Tim has done, and we're not really planning on making any material changes to the current structure.
And you mentioned earlier that you have managed funds focused on gold and silver. Would you ever start a fund focused just on uranium stocks in addition to this ETF?
Well, this ETF will be focused on uranium equities. So the miners, the developers, the explorers, it holds kind of a cross section of uranium equities. So that's the primary mandate of the Northshore index.
Yeah, but that's going to be passive. I guess the question I meant to ask was, would you ever start an active?
Okay, got it. Nothing planned at this point. I think ETFs are really one of the most popular choices for all investor segments today, and it's really where all the money is going. And that's because they're wonderful vehicles. I mean, they're transparent, they're liquid, you can trade all day. People love the transparency of the daily disclosure of holdings and the methodology. So we really like the ETF vehicles, and it was one of the reasons why we pursued this one.
So let's move on to the uranium market now, and I want to pick your brain a little bit about this. And one of the things that surprises me that in spite of all the activity that we've seen from SPUT and also your competitors, and also this tidal wave of sentiment toward this green economy, also China announcing that they're going to build 150 reactors over the next 15 years, just a lot of positive news, but yet the price seems to be hanging around the mid 40s. And I'm surprised it's not a lot higher. And it seems like there's always an ongoing supply of uranium coming to the market. Can you give us a little bit of color on that? And what are you seeing?
Yeah, sure. Well, first of all, I'd like to point out the price of uranium is up about 50% in 3 months. So I don't want to downplay the move it's had. It's had a pretty significant move. And if you take a step back and look at the longer term chart, the price obviously meandered in the 20s and 30s for a very long time. So when the price of uranium broke 35, that was to us the first kind of significant psychological or technical barrier. And the reason was we just hadn't seen a price for about 5 years at 35. And then we kind of broke 40 and 45, and we did touch 50 very briefly. So there, I think the category has demonstrated that it can move when there's interest. So we think longer term, the price is going to get to the incentive price needed to get a lot of supply back to the marketplace. And every company and every mine is different, but clearly the days of uranium with 2s or 3s or 4s on the starting price are kind of moving behind us now. And we think that longer term, there's a very constructive story behind getting uranium prices to much higher levels. So that's really what we expect to happen. It's not going to be an overnight move. What's really going to move it in the next few innings, we think, are going to be the utilities. The utilities coming to market, reloading their contracts, and that's really what's going to drive the next leg of what we believe is the early stages of this bull market.
And John, I know you can't tell us exactly who the sellers are, but can you give us some color in terms of, are they producers, or are they other financial players? Who exactly are they?
Yeah, well, I think we've purchased uranium from close to 20 different parties. So and I think that's a function of, one, the volume that the trust has been buying. And I think it's also a function of the price is finally back to levels that haven't been seen for a very long time. And I think people can't lose sight of this perspective that, the price of uranium has recently reached levels that hasn't been seen in 9 years. When that happens, that changes people's behavior in terms of, okay, I can finally sell this stuff that I've been sitting on for a very long time. It actually loosens pounds and sets them free into the marketplace. So we've seen some parties come to us and say, hey, we've got some pounds to sell you, and we've got pretty good intel that a lot of those pounds were purchased years and years ago. So this price discovery that's happening and this new liquidity and activity that's happening in the spot market is acting as an incentive to basically loosen those pounds and then put them into the marketplace. And the trust has, done a pretty good job of acquiring them. So, everybody has an incentive price, whether you're a trader or a producer or a financial holder or a speculator, in terms of where you want to sell your pounds and what kind of profit you just made on them. So yeah, I think the reality is there's always pounds coming into the market. I think at some point we're going to find that we might have more trouble finding pounds as a lot of those earlier sequestered pounds kind of come loose and we acquire them. It may be harder for us to find fresh new pounds.
And John, on your Q3 call, you mentioned, or I believe somebody asked a question about whether or not you're looking at other metals. Can you provide any insights on that or any updates?
Yeah, I mean,
just in terms of other investment funds.
Sure. Yeah, I mean, we're constantly looking at the market landscape and the market dynamics and trying to figure out what we think might make sense in terms of different investment ideas. When we launch new funds, we have to take a pretty hard look at them and ask ourselves, one, would we put our own money in that? Because essentially we do seed a lot of our own funds. So whether it's an acquisition or putting seed capital into a new fund, it's not a light decision to write a check for, say, $10 million of our own capital. So I think that's always our first test. Do we eat our own cooking? And second of all, can you structure something that is marketable and is shareholder friendly? Those are really critical decisions for us, because there's no point in providing the marketplace with more Me Too products that don't really differentiate themselves or add real value relative to what's available. So there is a very interesting shift going on right now in a number of sectors in the metal sector, which has us looking at different areas. We haven't made any final decisions, but a lot of these sectors have gone through 10-year bear markets. And over those periods of time, it's very difficult to launch new funds into that kind of inertia. So with metal markets coming back to life, I think that gives us good opportunity to review some of these different segments and see if there's a good fit.
John, I want to digress now away from uranium and ask you about something that you and your team know intimately, and that's gold. Mm-hmm. Every commodity and asset in the world is up significantly. Oil's up over 100%, Bitcoin's up over 100%, uranium's up over 50%, gold's flat on the year. Is gold ever going to catch a bid again?
Yeah, well, gold is definitely starting to come out of its slumber. Some people might have said, well, gold is dead, and I think the right response is gold is just basically dormant right now. It's been treading water. Gold did its job remarkably well in 2020 when the world was looking for safe haven and all the disruption related to COVID. So gold was really the star in 2020, and it's, as other things have recovered, and central banks and governments have pumped trillions of dollars of liquidity in the system. That's obviously incented a lot of risk-on buying activity, hence why a lot of things like metals and energy products have caught the bid. But we think that gold is going to start to respond more productively. I think one of the things people are starting to realize is this inflation is not transitory. And a lot of people think gold is an inflation type of asset, and the reality is gold does really well when inflation is quite high. And we're starting to get to that point where the prints on these inflation numbers are starting to become more meaningful. So we saw that in the last couple of weeks where gold perked up when we printed that 6% inflation number. People are starting to realize that this inflation trend may not be short-lived, and I think gold will perform very well with that backdrop. And everything has worked so well for so many different asset classes. All you need is a little bit of a black swan or a little bit of a scare somewhere, and it's amazing how people's risk appetites and change and capital can move very quickly.
John, as we wrap up, what can investors of Sprott expect in terms of news flow in the coming months?
Yeah, well, I think we're working on some new product ideas. The acquisition of URNM, I think, is going to be a really great complement to SPUT. And we're constantly looking to improve our business, and I think we're in a really good sweet spot right now. We've got a lot of tailwinds right now in our business, and I think SPUT has raised a lot of awareness of our organization in terms of people have always known us for precious metals and mining, adding in an adjacent strategy, I think, has been very well received, and it's also, I think, helping Sprott Inc. share price recently hit a new 52-week high.
John, thank you very much for spending time with us today and providing us with updates on the various Sprott products. To all of the viewers, if you have any further questions for John and his team, please send us an email to info@bloorstreetcapital.com and we'll get you an answer. Or if you would like some research on Sprott, send us an email and we'll send it along. John, once again, thank you.
Thanks for having me. Appreciate it.